The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. This quote is by Marlo Giacadando. Be strong. Go with your heart and believe in miracles because anything can, and I'm going to add will happen. Market-wise, let's take a look at it out here. We have the Dow down 313. NASDAQ is off 85. S&Ps are down 31. Gold contract up $6.20, trading at $1,204 an ounce. Silver down 5 pennies at $16.22 an ounce. Platinum up $8 at $1,169 an ounce. Copper up 2 pennies at $2.79 a pound. Light sweet crude down 87 cents at $55.83 a barrel. Bonds, you have the 10-year up 5 ticks, 129.27. 30-year up 1.5 at 165.18. And King Dollar up 51.6, trading at 97.66. The euro is up 35 at 107, and the yen's down 22, trading at 118.79. Our phone number is 877-927-6648. Give us a call, folks, on what's going on in your world. Let's go to the world of the S&Ps. What do we have out here? You got an option expiration, folks. Market gap down this morning. The gap down. We have juice behind the move, high volume behind this move on the way down. If we take a look at the SPYs first, what you're going to see is this. Yesterday, the SPYs went topside. I tried to get topside with 68 million. Well, guess what? We've already done 131 million on the way down. Bottom line, couldn't get into the swing point from the 23rd of March. You know, the benchmark here is the 209.35. You're going to close below that. What does that set up? That sets up a run to the bottom of the consolidation, which is 20, which would be the March 11th low. That's 204.40. That's on a shorter term basis. We pull this back a little bit more, and what you're going to see, what's game, of course, is the 198. 197.96 from December. And the bigger number, though, folks, is this October 15th swing low. The October 15th swing low is the number. And that's a long way down from where we are. Qs, we take a look at the NDX 100. Inside the 3 Qs, what we have with the 3 Qs is this. 3 Qs are backing down. They're $1.88 right now. Same type of setup. Big expansion of volume. Yesterday, volume, as I tried to get into highs, you did 16 million shares. We've done 34 on the way down. Those swing points, the next stop is 104.24 inside the Qs. IWM, the Russell 2000. The Russell 2000 had broke topside. Bottom line, couldn't handle it. Not only couldn't handle it, what you do have you back under the benchmark being the 25th of March. That high there is 125.60. Excuse me, folks. We're trading at 124.01 right now. Also did the exact same thing. IWM tried to go topside. Try to get up there with, I believe 2 days ago, we did like 39 million, which was really good. Yeah, 37 million. So now we're down at 37 million. Bottom line, yeah, that also is saying that can't handle it either. So that's pretty intense because the small caps themselves, you know, were not acting that bad. They were acting the best, actually. Gold contract. What do we have with gold? Bottom line, folks, gold wants higher price. We get a Friday happening. They're not necessarily hit gold. Gold has been in a sideways move out here today. We're up $6. You're at 12.04. Your swing point out here that it wants to go after is the 1227.50. And the divergence that we have inside the gold market is like this. The gold contract, when it was going over its B point on the 1st and the 6th of April, didn't have enough volume. We shot 6,000 contracts. GLD, however, had the juice. The GLD is projecting, it took the B point out, took it out with volume. The GLD is, right now, the GLD is trading at 115.59, and that projection is up to about 119. GLD also has decent volume out here today. We're doing 2.6 million. Yesterday, you did 3 million. So the GLD has some juice behind the move. Now, bonds. We got to look at bonds. This is just amazing what's going on with bonds. Okay, first I'm going to look at the 30-year. So bonds today had really high volatility. I mean, you talk about it's not that it's unusual because we get volatility all over the place. Let's see. We're not in year 2006 just yet, Tom. 2005. Okay. USM5. So what do we have? Well, when the CPI came out this morning, you had bonds come down very quickly. What they didn't do is that they didn't break the swing low of yesterday. Yesterday was 163.07. You came down fast, you came down furious, but guess what? You only got to 163.10. What does it do? Market starts going south, bonds go north. We've done, the 30-year right now has done 242,000 contracts. This baby, folks, looks like a very clean ABC structure on the way up. And your A point on this is the 54 level. Your B is up at, if I keep it conservative, is 65. It's a lot. $11. $11 is going to get you to 73. The high is 71. What that is saying is that 30-year want to go to all-time highs. We go take a look at the 10-year. 10-year right now, what do you have with the 10-year? 10-year is trading at 1. Oh, this is so close to taking its B point out. Interesting. 10 years trading at 129. Let's put this up here. 129.27. You've done 1 million contracts today. Your B point on the 10-year, folks, is only like 875,000 contracts. The 10-year is set up to do an ABC structure on the way up to 133. That, folks, is going to bring the yield down to about 1.65. We're at 1.845 right now. You need a mortgage? Go get the mortgage right now, folks. You know, my take is that bonds are going to go up more, down on yield, but guess what? When you can get a mortgage, a 30-year mortgage out there at a price point, more than likely at this price, you're probably talking about 3.7 on a 30-year. Big number. Sweet, sweet number. No two ways about that. Our phone number is 877-927-6648, and you're going to have volume coming in this market just about all over the place, folks. What has happened is that, well, here, let's take a look at who's getting hit the most. If we take a look at the Dow Industrials, this is what you have. And it's going to get a little nasty coming into this close, by the way. Coming into, actually, so all the Dow stocks in the red. American Express is the leader on the way down. That's down 360. You got Travelers down 340. United Health's down 323. 3M is down $4. Johnson & Johnson is the strongest stock inside the Dow Industrials. That's down only 18 cents. GE would be next, down 13. Pfizer's next, down 19. And McDonald's next, down 71. Inside the NDX 100, we take a look inside the NDX 100, and what you have, what's leading lower, is that you get Vipul Communications, Checkpoint Software. Checkpoint's down 325. You get Walgreens off 317, and Avco Technologies is down $4. If we pull this up here, right there. You know, Google's this is Google. We take a look at Google. What you have with Google is this. Google's trading at 533. That's down off the high of 580, and Google's making its way down into the lowest swing points of December. Google, you know, what's intriguing about Google is that Google is one of the first equities that actually went after its October 15th swing low. That October 15th swing low, same deal, was a high volume swing low. That was at 518. You know, Google not only blew by the 518, it goes all the way down to a price point of 509, makes its way all the way back. It did a nice counter trend bounce on Google. It went from 509 to 583. Now you're at 531 again. It's making its way back down into those lower prices. King Dollar. Let's go look at King Dollar, because what King Dollar has done is this, folks. King Dollar is getting close to its lowest swing point, and whether you're bullish or if you're bullish or bearish, bottom line is that it's going to wake up Monday morning, Sunday night, and this swing point now, I suspect we're going to go after that swing point. We're at 97.60 or 97.59. That swing point is 96.31. This is Tom O'Brien. This is TFNN. You stay right there, folks. Coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's down 312, Nasdaq's off 84, S&Ps are down 31, and as we came into work this morning, you had those futures down south pretty good. And if we go overseas, folks, what you had is that you had the Asian markets. Actually, here, let me bring them up for you, because you can see the Asian markets, when they closed last night, it was no big deal. Okay, Hang Seng was down 0.3%, Nikkei was off 0.6%, Shanghai was actually up 0.5%. What you had happen is this. Is that the regulators, okay, and this is pretty intense. This is kind of just like the opposite of what we expect that happens in the U.S. markets. It's almost like whether it's regulators and or some nice large funds being shot in the market. Evidently, the regulators in China wanted to basically take this market down. Now, the market has gone up dramatically. There's no two ways about it. But you're going to see Monday morning or Sunday night, our time, this market's going to be down. It's going to be down good, because this is what the regulators did. So after the market closed last night, what the regulators did is that it's called the trust financing in China. And a lot of folks use it, okay? Well, they outlawed trust financing, number one. So what that does is that's going to put squeeze on the margin aspect of it. And the margin right now in China is astronomical. I can get you the numbers. It's huge, okay? That's the first part. But the second part is actually even bigger. So the first part goes like this. The investors, through the brokerages, okay, have used it. It's called umbrella trust, okay? And what it allows actually more margin than the brokered dealer community can give the individual investors. That's the first part. The second part, though, is the big number, folks, is that they simultaneously have allowed, and this wasn't allowed before, they're allowing mutual funds to lend shares to short sellers inside the marketplace, okay? So bottom line is that Shanghai, which closed at a high Friday, is going to be getting hit in a pretty hard way. We'll see exactly how intense it is coming out of the gate. If we go over and we take a look at the FXI, what you're going to see is that the FXI, that's the iShares in China, China large caps, that closed yesterday at 52.56. It opens up today at 50.03, and that's not, I suspect, that's not that terrible, but you are going to have some heavy damage coming in this marketplace. If we go over and we take a look, and the damage isn't just there, by the way. If we go take a look at the DAX in Germany, well, here, percentage-wise, watch this. We're not even down a lot percentage-wise. The Dow's down 1.7, S&P's down 1.3, Nasdaq's down 1.7, right? And in Europe, folks, the DAX is off 5% in 3 days. The DAX was down 2.5% today. The FTSE was off 1%. The CAC in France was off 1.5. The DAX in particular, which was on a tear too, the DAX came off that high with vicious volume. Bottom line is that you're going to see this thing go a lot lower. The DAX in 2 trading days, okay, this is how it works though. In 2 trading days, it gave back a month and a half of trading. The DAX right now, we're at 11,600 and 10,700 is going to be coming at us. So it's going to be pretty intense watching this whole thing shake out. If we look at the FTSE, what you have, and the FTSE, not as bad, but the FTSE consolidated on the way up. The FTSE right now is at 69.94. It's going to have to, it's going to take some pushing to get back inside 69.74. I do expect you're going to see that, but bottom line, the DAX realistically can have a free fall. The reason being is that it went up so dramatically. When this thing goes south, it can go south very quickly. We go take a look at the XLE inside the equity. There she is. The XLE out here today. Sideways move, no big deal. Not any damage too, by the way, okay? So that's something you're going to want to keep your eye on. XLF, the financials. We take a look at the financials, different ballgame. Financials haven't been able to basically get into their swing point from the 23rd of March. You have volume that's coming out to the downside right now. Bottom line, that also wants lower price. The IYR, we take a look at commercial real estate. Commercial real estate going sideways, no big deal. That's all about rates, of course. Rates drive product. We take a look at the Dow stocks. You get a lot of Dow stocks, so we're getting some damage here. 3M is down 455. Let's take them one by one. We start with good old IBM. IBM continue to spend their money to hold the stock up, but just doesn't do it. IBM is down $3 right now. You're going after a lower swing point. You know, we'll see how it handles the 158 level. 3M. Now this one here, this baby can go south in a big way for a long period of time, and this is why. 3M is down $4.52. You have volume come out of the stock. This has been in a consolidation going all the way back to November, folks. And when you're in large consolidations like that and you see volume come out of the stock, that's a heads up in itself. This is a clean break downtown, and that's a clean break after you're trying to go uptown, and each and every time that we're up, there's absolutely zero volume compared to the way down. You know, so bottom line is that is going to be problematic. Why? Because the length of time that it's consolidated at highs, how it's come off highs. Honeywell, next same setup in Honeywell. What you have with Honeywell? Honeywell's down 225 today. You're at 101.67, and we'll see how Honeywell handles 100.30. Yeah, it's going to blow that one away. Let's put this on a weekly. What you can do right now, actually, I don't have to put it on a weekly. Let's see, this is what, some of these are nasty, man. Okay, so Honeywell, that October 15th swing low, it's a high volume swing low, it's $82. These are the ones that people can really get hurt in, folks. And well, the S&P itself is a big number on the way down there. Honeywell's a big number. That thing is just sitting there. And the amount of stocks that have already hit that October 15th swing low adds up each and every day. If we go take a look at the S&P again, this is like nasty. We're at 2078, and it's like, okay, the high of the low is 1874. The low is 1820. 1820, 1920, 2020. You're talking about a good 15% down. You know, what the S&P did do again today is this. The cash S&P right now is at 78. We're already inside the lower range. We're inside the range that was established in December of last year. Actually, it was established in November of last year. You know, so when you take a look at this tonight, if you happen to be driving in your car, you're going to see some heavy destruction in one day, and the destruction has to do with you'd be inside the lower range. What does that set up? First off, it sets up you're going to go after the swing point, which is 2039. It's the first one. Your next one down there is 1973, and the larger one, of course, is that October 15th swing low. Correlation-wise, what I expect you're going to see is that bonds are going to break out to highs, and King Dollar, bottom line, is going to go after that lower swing point. You get a lot of volatility out here. You get a lot of action out here. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are down 304. You get the NASDAQ off 81. S&Ps are off 30. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And, the dollar, the run on the dollar, folks, is going to get really interesting. And this is why. The King Dollar had done a 2-to-1 ABC structure on the way up. Came off that high with volume twice. So that sets up a much larger correction. That's the technical setup. The fundamental setup, sure enough, is starting, and it's been happening, pressure-wise in the last, let's say, 4 to 6 weeks. Specifically, corporate heads coming on saying, man, the dollar's too strong. Jack Welch out there saying the dollar can basically take everything down. And the hypocrisy, of course, is huge because, 7 years ago, 8 years ago, everyone's saying, oh, the dollar was trash and it's terrible and what's wrong with the country and all of this. Okay. Bottom line is that you had the G20 meeting today in Washington, D.C., and sure enough, global financial chiefs identified volatile currencies as a threat to the improving world economy, signaling for the first time that they are concerned about the surging U.S. dollar. Bottom line is that dollar has gone up 17% this past year. It's a big number. So we'll see how fundamentally that whole thing shakes out. But what you do have is that you have these central banks right now looking and saying, okay, the fast move inside the dollar is presenting a problem. So and what's amazing is that it was Jack Lew about 3 weeks ago, the first time that I heard the Treasury Secretary talking about the dollar in general since John Snow was talking about the dollar. And the quote was the exact same. The quote was that the United States likes a strong dollar. It's good for the country. Bottom line, that's what John Snow was saying in 2001. That's when the dollar went from 121 down to 75. It took years, but that's the bottom line. The same mantra is out there. If we take a look at the euro right now, so the euro has been a straight line down. No two ways about that. Euro got down to 105. You're at 108 right now. Bottom line, you came down straight from 140. This bounce here looks like it wants to take the euro to something about 113. We'll see if, in fact, it's just a large correction, because you come off the highs with volume, or, in fact, is this absolutely a larger change of trend, and, you get a... What happens with currencies is this. Currencies like trending for years, folks. And when you actually look at the dollar, if you're watching Tiger TV right now, you'll see I have the dollar up. And the dollar, okay, this thing is a moonshot. Well, no, it's still a moonshot. On a monthly basis, it is absolutely a moonshot. The dollar started out in July of 2014 at 79 and went straight to almost 100. Did it hit 100? Yeah, 100.38. And when you look at that on a chart, that is as close to, that's parabolic. That's parabolic. Anything that's really, over basically 45% is parabolic. And that's close. It might be 45%. No, it's not 45% angle. That's a higher angle than that. So in that context, it's like, okay, so are you going to pull back to 92? Well, let me just show you percentage-wise what, on a longer-term basis, what a normal correction. So a normal correction in a market that wants to go higher would be 95.60, and you're at 97. That's a 0.382. That's the strongest. That would be saying that the dollar is still like strong like bull, pulls back 0.382. That's a very small correction in the context of the move. A normal correction in a market that still wants to go higher is a 50% correction. A 50% correction brings you back to 90.21. A 0.618 is, well, which is the very large correction, that brings you back to 87. And what does happen, excuse me, folks, at the 87 level, and this is where this will get really wild. Actually, let me put this, I'm going to put this on a longer term basis. What does happen at the 87, oh, look at that. Yeah, see, you know what we can do, which could be saying that the dollar would still go higher to, is this. When the dollar took out the highs, that it had been consolidating in. The dollar was consolidating at a price point of 89 and 90. That number there, that can pull back to that area very easy, and that would be positive in the aspect as long as when you're coming back into this 90 area, if the volume contracted, that'd be like, okay, that's a normal deal. Why? Because you went one way. And we went one way for almost one full year. So it's a big number. What you can expect is that you can expect more volatility inside the dollar, monster volatility inside the bond market. The bond market, not the Treasury market itself, okay? That's going to be volatile. But bonds in general basically getting pushed around and getting pushed around big. This bond market, the way this is trading right now, it looks to me like we're going to take out the B point of an ABC structure on the way up. That B point, we're very close to it right now. We'll probably go after it Monday or Tuesday. We're at 165.06. The bond has gone from 165.19 today. All we have to be up is what we were up today. And that would be at the B point. The real question is going to be, of course, is that are you going to take it out with volume? You take that B point out with volume, that price projection would bring you over the highs of January. Now, two different things will end up happening, I suspect. Is that, number one, you're going to get covering of short positions at the 165.26. You get up and over 171.09, man, they'll be short covering like an incredible way. That's your 30-year. We take a look at the 10-year. What you have with the 10-year, we're right next to it on the 10-year. The 10-year, we've done 1.1 million contracts. In fact, this thing just keeps going, because when we started the program 41 minutes ago, 37 minutes ago, we only had 1 million contracts. So we've already done another 100,000 contracts since we've been on the air. You're going into the swing point. The swing point, the swing point has 1.1, and that's down below the B point, actually, but I'm just being as conservative as I can be. The actual B point only has 380,000. That is saying it's going to take it up and over it, and take it up and over the 130.20 number. And yeah, negative rates is just, seems like we won't have negative rates, but negative rates in Europe are basically generating smaller rates here. You know, what you will get is that the Fed thinks that they're going to raise rates, but the market's saying there's no way you're going to raise rates. We're going to take a look at some of the, let's go look at American Express. So American Express come out with numbers last night. They didn't make their revenue numbers. American Express is trading down $3.40. And this baby here is, it's really not an ABC down, because you do have the low that was established on February 13th. That was 77.72 with 34 million. Now, there's a lower low the next day with 18 million. But what you do in a situation like this, when the high volume level is so close to the swing, you want to take the higher level characteristic. It's just a cleaner way of doing it. You know, it doesn't mean you can't do a full ABC structure on the way down, but bottom line, you know, it's interesting too. When you put the weekly on this, you're at, this thing's a mess. Okay, so when I put the weekly, oh man, this is, okay, so check this out, folks. You put the weekly on American Express, and anyone that has bought American Express since June of 2013 is in a losing position. Now, that's really unusual in this market. Why? Because this market's been a one-way market. It hasn't been a one-way market since November. Since November, the market really hasn't done anything. You know, but when you take a look at American Express, it's, man, this volume, they are getting out American Express, and they're getting out fast and furious. Now, American Express, the big magic number on American Express is 65. Right now, you're at 77. I suspect first run's going to be 65. You get back inside 65, that'll be huge problems. Why? Because that's where you broke out from the 2007 highs. And this is where, after the fact, you know, when you pull these up, you'll actually see, you know, oh my God, there was no one at these highs. No one. You know, this thing stayed at highs. That's pure distribution at those highs. The volume was so light, it's incredible. You're talking every month, you're talking 76 million, 71 million. Yeah, these are monthly bars. Then what do you have? Well, October, all of a sudden you come down with 120 million. You made a high in December, it's 81 million. You come off that high with 122 million in January. February did 211 million. So check it out. You make a high with 81. You come off the high with 211. Big problems. Big, big problems. The Visa, let's go over and take a look at Visa. Not that Visa is American Express, but what you have with Visa, this is very subtle, okay? Visa's down $1 at $64.61, off the high of 69. Breaking a B point. You know, Visa broke a B point today. It has the volume. A point is 69.62. The B is 64. Your C is 6681. What does that set up? That sets up 6182. And when you go back over the last time it had any strength, guess what? You're at 59.58. That's where that baby's going. We're going to be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. You get United Technologies down $2.15. Walmart's off $1.29. 3M, that's a big one. That's down $4. You get Procter & Gamble off $0.99. Boeing is down $2. You get American Express off $3.13. And inside some of the higher volume stocks, and more than likely we are going to have a high volume market today because you have option expiration. So let's put it this way. It has a shot to have a high volume market. What we have had is that the S&Ps, the SPYs rather, Qs, diamonds, they all do have high volume. We have Apple down $1.44 right now. You get Facebook off $1.50. That's nothing, you know, in the type of the market that we have. Actually, and our market's not down that much. You're looking at big numbers because of the fact that you are at big numbers. We go take a look at some of these further oil stocks. ExxonMobil. What do we have at ExxonMobil? Exxon is down 91 cents at $86. It's not a bad. That's not a bad setup either. You know, yeah. Let's pull this up for a second because it's going to be interesting watching these oil stocks, how they're going to shake out. Exxon right now is trading at 86.80. You're backing down at 11 million shares. And what you want to watch is 85.40. You want to watch how it comes into that because this is light volume actually on this back down. Because what would be pretty cool, this could be setting up a consolidation because it's down big already. I mean, you know, that thing's off, you know, from 87, you know, coming down. So no, it's off of 105. Yeah, you $1.04 down to a price point of 83. I don't see it getting back inside this 89 area for a bit because it came down so hard because that's where it was building cars. But that little consolidation's not bad. Chevron, CVX. We take a look at Chevron. That's the second largest weighting inside the XLE, and that's the same thing. That's backing down. You're backing down with lighter volume. The oil contract itself. Let's go over and take a look at the oil contract itself. CLK 5. So, oil, 207,000 contracts today. You get a sideways move. You're over 56.02. This actually looks like a small ABC up. On the weekly, it's going to be an ABC too. If I take the larger one, you get 47 to 52. 44 to 52. Not bad. $8 gives you $50. That's interesting. So $8 gives you 56, and that's where we're at right now. That's kind of just lined up there. Let's go take a look at good old Apple. Apple right now is trading. Now, okay, so watch this. Apple. This is subtle. These are the ones that you have to really watch out for. Apple is only down $1.47, but guess what? You get volume pulling out of it, pumping it up. So 124 is game now on Apple. We're at 121.63 is game at Apple. You know, but when you see them and the volume just goes up a bit, and they don't move, that is a big indication. I'll bring you over to Walmart because that's what Walmart had been doing, folks. Okay, Walmart was just crawling lower. You know, today it basically did it. You know, meaning down. You're down $1.37, 10 million shares. Volume comes out of it. A whole ball of wax. It's an ABC down now. It's a decent one, too. Actually, if we put this on a weekly, check this out. Walmart's a decent ABC down. Ooh, that's nasty. Yeah, you get action. Check this out. Your A point is 90.97. Your B, it's a $10 ABC down. That sets up $73, which totally makes sense because $71.51 are the next lows. And in fact, the high volume swing low on this from October, this is sick, is $72.61. And what did I just say? The ABC structure down Yeah, the ABC structure down is 73.90. That's where this thing is going. Now, this is also a cool heads up, and this is what it is. I just picked this up here. This is pretty intense. So what Walmart did, and now when you're bisecting and dissecting your portfolio, folks, you got to, as you're looking at the whole market, look at some of these large caps too. Walmart in particular, what it did is this. Walmart was not a bad-looking stock as it broke out of the consolidation that it was in from October of 2012 going all the way over to October of 2014. So it was in a 2-year consolidation. It gets over the consolidation, and it has juice behind the move. Okay? It was decent juice. Your A point on this was 57 on the way up. Your B was like 77, so you get 20 bucks. Your C was 67, so you get 87, right? Well, guess what? It gets all the way up to 90. So it did what it was supposed to do on the way up. This is what the problem is. The problem is now it finished the run up. You're coming down, and now what has happened is that you're inside the lower range again. And this just happened today, by the way, okay? The lower range on this baby is at the anything inside, well, it doesn't happen today, I guess, because, well, if I'd be more conservative, inside $79.34. So now it's inside that level. So what does that set up? Well, when you pull this up, the first place that sets up is the October 15th swing point. That October 15th swing point, that's going to be not a problem for equities. That just happens to be where those equities want to go. So I suspect, let's go see where 3M, the October 15th swing low is in 3M, because this baby is coming down hard, and she's taking every, yeah. So the October 15th swing low on 3M is at 135 to 131, and you're at 161. You know, that's up. And what 3M is doing very quickly is that it's taken that full consolidation out, going all the way back from the 21st of January. What you do have on the weekly basis looks a little bit tougher. The reason being there, yeah, this is a clean break. Well, actually, it's not on a weekly basis. It's not a clean break yet. On a weekly basis, it's just it's going to go after the 157. That's how that little baby is set up at this particular point. You know, what we are going to have is that as we come into this close, because of option expiration. Now here, I'll give you a setup coming into this close. An option expiration, folks, okay, most of the time it has a shot to have higher volume. But I've seen plenty of times that, guess what, the volume doesn't come in. If the volume doesn't come in the indices, that would mean that, guess what, you can get a bounce. I suspect that's not going to happen, but I just want to let you know that before this close, because most of the volume is going to come in at this close. Like right now, with only 2 minutes left, right? Okay, with 2 minutes left, we're doing $695 million on the NYSE, and on the NASDAQ, we're doing 1.8. I suspect what you're going to see is that the NASDAQ's going to come in somewhere over the 2 billion mark, and you're going to see the NYSE come in at like 800 million. And that 800 million, probably more. They'll probably blow out 150 million coming into the close in the NYSE. You stay right there. We're going to be coming right back with all the closing numbers. Dow right now is down 276. NASDAQ is off 76. S&Ps are off 26. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Make it a great one. And you're kicking into spring. I suspect at this point, I hope we have nice weather right across the country. This is a quote by Dan Zabra. Surround yourself with people who believe you can. Market-wise, let's take a look at it out here. We had the Dow finish down 279, NASDAQ off 75, S&P's down 25. Gold contract up $5.90, trading at $1,203 an ounce. Silver flat at $16.22 an ounce. Platinum up $10 at $1,171 an ounce. Copper up 2 pennies at $2.79 a pound. Light sweet crude, you had it down 56 cents, trading at $2.79 $2.79. How about that? $56 a barrel. Bonds, we had the 10-year flat at 129.29. The 30-year up a full point at 165.07. In both the 10-year and the 30-year, folks, are going after a B point, and they have the volume today. You know, we'll see how they attack that B point. I expect what you're going to see, that B point is going to get attacked on Monday morning. You get the volume. What that would do is that the price projection for the 10 and for the 30 would bring them over their highs of January. That would basically take the yield on the 30-year, talk about taking it down, right now at 1.86. That takes that over the January high. You're going to be down at about 1.8 rather. It'll take it down to about 1.6. King dollar. King dollar couldn't handle price again out here today. That's down 34 ticks, 97.58. The euro is up 49 at 108, and the yen is trading down 12 at 118.90. Our phone number is 877-927-6648. Let's call, folks. Want to know what's going on in your world. If we start out with the world of the SPY, this is what you have. We start out with the S&Ps. We'll use the SPY inside that correlation. SPY today comes down with conviction. Wide price spread, accelerated volume, all of the above. They want out, they want fast, they want furious, they want all of the above. And what you're going to see is that we went down $2.42. We did 173 million shares, and that's a monster, by the way. That is after making highs with 99 million shares. All the volume, folks, is building cause to do what? To break the consolidation points from 204.40, which was consolidating March 11th, as well as March 26th. Next move, I suspect, is going to be not only into that move, but what it's going to have. It has plenty of time to get into the 198 area next week. You know, that's a big move. That's 10 points down from where we are. The 3 Qs, the NDX 100. What do we have with the NDX 100? Same type of setup in the NDX 100. NDX 100 here is trading out at a price point of 106.04. That little baby pushed down today $1.65. Also had an explosion of volume coming out of the stock and the ETFs. That's after trying to make a high. The 3 Qs are the weakest indice when you take a look at the Qs, the SPYs, and the small caps. 3 Qs, 41 million shares come out of it. That swing point on the 3 Qs is 104.24, and that volume is 47 million. We've done 41 million. So what the 3 Qs have also done is this. The 3 Qs came back inside the lower range. The lower range that I'm talking about is the range from the November 28th high. We took that November 28th high out in February 12th. Well, we're back right inside it. When you're back inside it, what does that do? That gives you game for that lower consolidation at 99. And, of course, we get the infamous October 15th swing low that's hanging out there that wants to get tested. That October 15th swing low, it's like a broken record, I know. But that October 15th swing low is where this market wants to go. IWM, what do we have with the small caps? Now, this is bottom line. This was the strongest indice out here. That got blown apart, down $2. Volume, 45 million shares. That's after making a high out here with 37 million. That sets up, it's not the end of the world in the small caps. That sets up like a 119. Right now we're at 124.43. So bottom line, what I do expect you're going to see out here, you are going to expect to see a lower price. We'll see how it handles that lower price. Gold, what do we have with the gold contract? What you have with gold is this. Gold has held up And what's impressive out here today is that it held up in a market that was highly volatile, not only in the currencies and the S&Ps, but the bond market was highly volatile too. And the bonds this morning when the CPI came out, folks, looked like they were going to get croaked. They did get croaked on price, and volume expanded pretty dramatically, but they never reached the lowest swing point. Turned around, goes topside again. Gold market out here, what do we do today? 107,000 contracts, nice contracts. Gold is setting up for this ABC structure on the way up. We're trading at 1203. I suspect we're going to see 1246 next week. Silver. Let's go take a look at silver. And there's a divergence here. And this is got to get straightened out. And we'll see how it gets straightened out. But silver, for some reason, looks really weak. You know, silver couldn't hold price today. It's like, okay, man, you know, what the heck's wrong with the silver market? Well, we'll find out. And that is always problematic when, you know, gold and silver like moving together. Now, silver is twice as volatile as gold. So we'll see if silver can stop performing. But silver has not been able to get into its higher range. That higher range that starts at 16.43. We made it to 16.49, but guess what? They sold it right off as soon as it got into that level. Bonds. What do we have at the bond market? Bond market wants dramatically higher price. It's pretty intense, actually. Let's take a look at the TLT. So the TLT is the 20-plus bond fund. The TLT, like all the bonds their high was generated on January 30th. The TLT today did 7.2 million shares. Your B point on this is only 5.9 million. That's saying that your probabilities are going higher because now you're pushing on the swing point from March 24th as well as March 25th, and you're pushing on that swing point with volume. That's saying that the TLT wants to go to the highs of 138.50, and what that is setting up, of course, is not only higher price, lower yields across all the bond markets. Big numbers. And the volatility inside here is pretty intense. We go take a look at the King Dollar. So King Dollar is the mover. King Dollar, folks, comes down again, has juice on the way down. This is, when you take a look at King Dollar, with the probability for King Dollar is that, number one, the highs are in. Number two, there's going to be a much larger correction. And where I'm going with that is that we had a 2-to-1 ABC structure on the way up. So we get up to the price point of 100.78. You come off, that was established March 13th. You come off that high with volume. You go back up and test it with volume. The test was done Monday. We got to a price point of 100.27. It failed on price, failed on volume. What does it do? Confirms again, you come off the high with volume. Bottom line, next week, it's going to challenge these lower swing points. Those lower swing points are at 96.57. Now, let's go back to the S&P once again. So if we take a look at the SPY, what you have is this. The SPY is pushing down, has volume behind the move. What we're going to see on Sunday night, well, the reason that the futures were down this morning, of course, is that why? People were selling futures. They were down good. That's the technical reason. The fundamental reason, folks, has to do with they changed the rules in China last night after China closed. And flat out what's going on is this, is that in China, when they open up on Monday morning or Sunday night, what is happening is that the leverage positions in China, you can do higher leverage when you're doing these through trust financial companies. Well, the China authorities, after the market closed last night, decided that they can no longer do that. So they outlawed that through regulation. That's the first part. The second part is actually a lot larger. Well, they're both large. The second part, and this is just really so bizarre, it's unbelievable, meaning you know that the regulators want to push the market lower. What they did is that they're allowing, which never happened before, they're allowing funds, mutual funds now, to give short sellers shares. That's like saying, hey, guess what? That just opened the whole market. And that market, folks, I suspect is going to open lower. What does that do? That's going to put Europe lower. That's going to put us lower. You're going to see follow through Monday. You stay right there. We'll come right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the markets, folks, as we come off those highs, you had juice behind the move. This is option expiration, which would be expected, but, you know, sometimes there's not juice, but you get the confirmation out here. We did $892 million in the NYSE versus the 755. Inside the NASDAQ, what you had is that you did volume of 1.9 billion. Of course, in whether it's all the ETF structures, you had some big volume on the way down. The door is never big enough in order to get out. That's just kind of the way it goes. Inside the diamonds, We the Diamonds, which is trade, that's of course the Dow stocks, that was down $2.80. You did 8.6 million shares. That was after that was after doing 3.8 on the way up. These numbers, folks, are pretty intense. And in fact, if you set up the consolidation, if we take a look at this, watch this. This is, you know, long sideways moves take a longer period of time to set up. But if you're a technical person, these things get so clean, it's absolutely incredible. And what I'm talking about is this, is that when you take you set up a channel from the highs to the lows, and on a horizontal basis, what you're going to see, and it's about as clear as a bell, ringing in a huge way, is that what you're going to see is that the top of the consolidation inside the Dow Industrials, you know, is at let's say the 178 area. Each and every time you're up to the 178 area, volume dies on the vine. In fact, yeah, I'll put this on a weekly so you can get a clearer indication of what we're looking at. So on a weekly basis, and let's put this across. I can put it actually a little higher. When you take the tops and you take the bottoms, what you're going to see is this. As we hit highs, you know, let's say the first high that was established in this consolidation, you have December of 14, you hit 179.78. You did that with 30 million shares, okay? 30 million away up. Then what do? We come down with 55 million. We get to a price point of 170. So, you know, we had gone from 178 to 170. You go higher again. What do? We go to 180 with 17 million. So the highs that were generated go like this. This is really, I love. So the first high that was generated, you did 30 million on the way up. On the way down, making the swing point, you did 55 million. You went and tested it again, 180, you did 17 million. You go back downtown again, we did 45 million. That got to 171 again. You go uptown again, we get to 182, we do 19 million. This is on a weekly basis now. You go back downtown again, you do 27 million. Now we're coming back down again, and we're not at the lowest swing point yet. So what you can see is that on the way up at those swing points, you did 30 million, 17 million, and 19 million. The bottom of the consolidation, we're at 55 million, 45 million, and 27 million. That's a market that's building cause to go down. We go take a look at the NDX 100. We take a look at the 3 Qs. What you're going to see inside the 3 Qs, same type of setup. Now, what the difference is with the 3 Qs is this. Maybe there's not a difference. No, there is. So watch. No, there's not a difference in the aspect of. Yeah, well, this is kind of what the difference is. There's not a difference in the aspect of the volume characteristic. What there is that the 3 Qs right now are trading at 106.01, and 106.01 bring you to November of 2014. So the bottom line, as I met Mr. Steve Rhodes, he's in the den growling a problem, is you know, saying, guess what? The Dow opened January 2015 at 17,823, and it's at 826 right now. Bottom line, nothing has happened. That's a fact. What has happened, though, is that each and every time that you've been going down, that type of energy going down versus going up, that is energy to build, and it's building cause to do what? Building cause to get into that October 15th swing point. And that October 15th swing point is nasty, folks, okay? We're at 106. The high of the swing is 94. The low of the swing is 90. And it doesn't mean, by the way, that you have to stop at that point. But that point is where this market wants to go. And inside the S&P itself, that is a large number on the way down. You know, we're trading at 2081. That number, the high is 1912 and the low is 1820. That's a big number. Inside the Dow Industrials, when you take a look at the Dow Industrials That number is, we're at 17,820. The top of that number is 16,600. You know, so actually, see, you know what's interesting about that? That's not that far down when you actually look at the Dow. We're down 279 today. You have 3 days like that, like this, you'd be at the top of the October week of the October 17th and October 15th swing points. Yeah, so that baby is out there. It wants to get tested. The real key is going to be how does it test it? Does it reject it? What do we do when we're down at those lower levels? We go over, let's go take a look at Amazon. Amazon today finally broke AMZN. Amazon was down $10 today. Had volume come out of the equity. Amazon has been crawling up, you know, trying to get into the highs. Couldn't handle it. Had volume come out of the equity, too. We did 3.8 million shares. You know, yesterday you're trying to get into highs, and you're trying to get into highs with 2 million, 2.2. Amazon wants to run down to this price point of $359.50. What's going to be interesting about Amazon is that gap, you know, Amazon's strong like bull, but that gap is way too big. The gap, when Amazon gapped away, the top of the gap is $299. So that wants to get hit. Another equity that wants to fill the gap, and in fact is running to fill the gap right now, is GE. You know, GE, when it come out with this reorganization, it will come out with they're selling $50 billion worth of assets to Blackstone. That equity had gapped away from $25.83. It gaps up to $28.68. Huge gap. Today was the first day that it got into the gap. So what we did today is this. You get to $26.92. You had volume of 87 million. You closed above the gap by 25 cents. That's not good enough. Not in a market like now. You're going to see this thing go after that gap. And the real key, folks, you know, Monday morning is going to be really interesting because Sunday night, the Chinese stocks in the U.S. have also been on a tear. When those rules changed, the bottom line is that you had very fast selling in the ETF structures of those stocks. You know, and what does it do? Well, it's just the opposite of when you have QEs, meaning that when the government's pushing money into the market, the government plucked money out of the market and simultaneously opened up a huge amount of shares that can be sold into the market or lent into the market. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had a Caterpillar off $1. You had a Big Mac down 75. 3M was off 4.15. Intel was off 40. Microsoft is down 54 cents. Let's go to Mike in Cheyenne, Wyoming. Hey, Mike, what's going on?
Tom, we're finally getting some rain. We need a lot of moisture out here, and it's good to have it, even if it's on a weekend.
No, that's good, man. That's good news. Yeah.
Absolutely. Hey, Tom, I got a question. About almost 3 years ago, you helped me out with a direction share, RUSS. And I've been kind of keeping my eye on it here lately. And it really had a good sign of strength today, and it went up. And I was wondering if this would be a good entry point.
Okay, so let's take a look. You get the RUSS, folks, is the direction 300% inverse correlation. Let's see, yeah, inverse correlation of the market vectors Russian index. So, let's see. I know what I could do. Hold it one second. Let me go to, I want to actually go to Russia for a second. Okay, so let's go to Russia. So, go into Russia. What we're going to do, folks, I want to pull up the actual index that it's trading off of. I'll get as close to where the heck is she? There she is. Okay, good. I got it. Okay, now let's see what we get here. Okay. Oh, not that one. Back. Oh, bummer. Okay. Okay, here, just give me one. Let me try this one more time. I almost had it. What happens with all of these indexes, folks, is that you want to get the index that it's trading off. Okay, come on, baby. Give it to me. Let's see. Right there. Nope. Bummer. Okay. You know what happens? I just can't pull this up this quick. Okay, so let's just, we'll trade right off this RUSS for right now. And when you take a look at it, so what you have is this. You're at $7.66. As you said, there's no doubt that it did have a sign of strength out here today. So let's see. So Russia will be open before us, which is too bad, because you know what that's going to do is that I suspect Russia's going to get down. This deal, you know, China's going to kind of reel in these markets, period. You know, but when you look at RUSS, I mean, you can get a run to 1162 pretty easy, just as even a dead cat bounce. What I will do, I'll continue to try to pull this index up. What's happening is that as I'm trying to pull this up, there's a few of them that just don't have numbers even on my screen. So what I'm trying to do is figure out which one has the numbers. Let me just do one more. Come on, baby, bring it up. Nope. No member weight data available. No. You know,
I was looking at the RTS.RS on Yahoo Finance, and it showed it's like at 998.96, and it dropped 62.64 points today. And that's why I think the...
Yeah, it's... what's going on... Just let me try one more time. I apologize, folks, but well, let's see if we can get this thing. Not available, not available, not available. I'm sorry, man. Can't get it. Bummer.
Okay.
Yeah. Can't get it. You know. So, you know, what I expect you are going to have out here, and this is, you know, kind of right across all the markets, folks. All the world markets have gone up, and they've gone up good. China, you know, no doubt, there's always something that seems to throw the spike in it, and it seems to come out of nowhere. This one here is the same type of deal. It's like, man, you know, that the China authorities, no doubt, you know, they want to slow things down. And, you know, this Hang Seng, you know, went from a price point of 23,000 to 28,000 in 1 month. Now, our markets have done more than that sometimes. That's, you know, that's a big run, though. There's no doubt about that. What you'll see, and a lot of that also, folks, has to do with new accounts in the marketplace, has to do with the amount of leverage that's in the marketplace. And when you look at the actual number, margin number, it's a large number. But it's not a large number in percentage of what even our markets are trading at in margin interest, you know, is trading at. The markets themselves, China markets are trading at 21 times earnings. So I expect, you know, I expect some heavy damage next Monday, Tuesday. So listen, hey, talk to me about this water deal. So when it's just not California, is it all the West out there that's having a problem with water?
No, we probably got like maybe 70% of normal.
Oh, that's not bad. Okay.
But, you know, we're getting some nice, really good snow, and then it's raining right now. But I'm just thankful for the moisture because we really need some. And
yeah.
It's going to be all across Wyoming, and we can certainly use it, that's for sure.
That's awesome. Okay, man. Well, listen, I apologize, and I will hunt. I'll hunt it more in the next commercial break. And if I can find it, man, I'll bring it up and talk about it.
All right. Thanks a lot, Tom.
Okay. Thanks so much. Have a great one, man. Have a safe one. When we take a look at the inside the Walmarts of the world, folks. Well, what's interesting about Walmart is this. Is that Walmart came out intraday also, actually at 3:15. And what Walmart is doing, and this is interesting, you know, even big stocks, they want to hold up the equity. So, you know, Walmart's getting hit, downward volume. So Walmart comes out at 3:15 today saying they're going to eliminate a layer of in-store management to bring, well, they're saying it's in order to bring their managers closer to the store and to have more hands-on in the store. As I'm reading this story, however, so picture this. They have 4,500 U.S. stores. Each U.S. store has, I believe, 6, let's see, in-zone managers, the role of zone managers. Now, they're all going, yeah, let's see. Yeah, it's six workers per store. That's a lot of workers. That's 2,400, 6, 5, 20. Yeah, that's 2,700, right? No, it's more than that. It's 27,000. That's 27,000 people. And they're not saying, in this article, it doesn't say that they're laying them off, but that's 27,000 people that the job has been eliminated. That's what it's coming down to. Okay, so this came across. Walmart has eliminated a layer of in-store management, part of an effort to simplify operations at the world's largest retailer. People familiar with the decision said the company will cut the role of zone manager and transfer the duties to other managers, said the people, who asked not to be identified because the move isn't yet public. The change is meant to reduce bureaucracy and put more power in the hands of people running Walmart's 4,500 U.S. stores. Until now, employees in the zone manager positions, generally 6 workers per store, had responsibility over several departments. One of them, for instance, might oversee pharmacy, health, beauty care product section, and in recent years, Walmart had zone managers in addition to individual department managers. That's now changing. Greg Foran, Walmart's chief executive officer, has been working to improve customer service at stores. How stores serve people in a simple, repeatable, and sustainable way was among the priorities he outlined in a recent meeting with U.S. executives, according to internal documents. Zone manager will be allowed to apply for other positions within the store, such as a salaried assistant manager or department manager. A person briefed on the changes said. The Arkansas-based company is expected to complete the changes by mid-June. The retailer is undergoing. The bottom line is that it looks like their bottom line is that they're laying people off. That's how this is going to come out. And if we do look at Walmart, Walmart pulls back today, has the juice under the move. We down $1.36. In fact, Walmart's an ABC structure on the way down, even on a weekly basis. Yeah, it's an ABC structure on the way down on a weekly basis. Walmart this week took out a B point. You did 36 million shares versus 27 million shares. Your A point on this is $90. Your B point is $80. It's a $10 ABC structure on the way down. That sets up $73. So Walmart right now is trading at the 77. 73 is on the table. What we also have on the table here, and this is what is a little bit different from where we are right now. What has saved the market many times, folks, okay, is the calendar. And what I mean is this. We're trading out today, and today is the 17th of April. Well, when we've taken hits before, you're taking hits right before the end of the month. And window dressing comes into effect at the end of the month. What is window dressing? Window dressing is, of course, when you're decorating portfolios up. New money's coming in the market at the beginning of the month. That's regular IRA money. And the difference right now is that we're only going to be, the next trading day is the 20th. So window dressing doesn't even come into effect until the 29th. So you have all of next week, to basically get some selling going. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials closed down 279. NASDAQ off 75. S&P's off 25. And percentage-wise, it's not a big deal, folks, but numbers, big numbers.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. And folks, if you'd like to test drive either my daily newsletter or the Gold Report, you can do that by coming over to our website at TFNN. You go to newsletters. You can go to trading newsletters. You see the market insights right there. Test drive it 1 month absolutely free. If you'd like to test drive the Gold Report, actually the market insights, you can test drive for 2 weeks absolutely free. The Gold Report, go into newsletters, go into investment newsletters. You can test drive that for 1 month. Now, one of our tigers had just brought something up in the den, and this is a fact. This is pretty cool, actually. You know, I was just talking about Walmart. And Walmart, folks, you know, in Florida, okay, there happened to be a large Walmart store that closed like out of the blue. And they were saying that it was plumbing problems. Now, I was looking at the news, and I'm thinking to myself, man, this is interesting. They showed the store. The store was inside a large, really nice mall. And this came out of the blue, and all of a sudden, you know, they walked in one day, this week, by the way, said, we have plumbing problems, store's going to close, we're putting, everything is for sale at 50% off. So they were showing the store, showing everyone coming out of the store with just bundles upon bundles upon bundles, right? Now, I was looking at that, I'm saying to myself, okay, this is interesting. This is Walmart, largest retailer in the world. I saw the mall itself. They're saying they have plumbing problems. Okay, so you know that we're in this business, we're also in the real estate business. We have a real estate fund, right? I'm saying to myself, okay, that's Walmart. I know how fast we could fix that problem, and in particular, the mall owner, okay, I was having a hard time comprehending that how is Walmart having plumbing problems and they have to actually close the store? Bottom line, really, you know, that just passed by me. I just gave you my thought process, you know, all of 30 to 45 seconds that night, you know, so I move on in life, right? You know, and bottom line, I was bisecting, dissecting Walmart. What I didn't know that Terry the Tiger inside the den put up is that, guess what? 5 stores simultaneously got closed for the exact same problem across the country. That, folks, together with what I just put out here, and Walmart put it, well, Walmart didn't put it out, someone else put it out. Bloomberg put it out, because you can see inside that the story that it wasn't Walmart who was doing it. The bottom line, they closed 5 stores saying they had the exact same type of plumbing problem. You know what, folks? And this is the kicker. The store in Florida, they said that it wouldn't be open for 6 months. People are getting laid off. Bottom line, you put that together with this story right here, Walmart, bottom line, they're closing those stores. And this is where the deviance comes inside, you know, dollars, cents, companies, cutthroat, all of the above. More than likely, they went, I would say that they're going to find something that legally they probably could close that down, and they're just basically saying that it's going to take us that long to fix. What the next thing would happen is this, is what? Is that they're not going to open those stores. Because when they said that the store in Florida, what I picked up on, they were interviewing some of these people saying, this is terrible. But what the newscaster was saying, well, it's not that bad for these folks actually, because the next Walmart store is only 4 miles away. So it'd be intriguing. This just happened when he put this up in the den. It'd be intriguing to Google those other stores and see where another Walmart store is in correlation to where that Walmart store is. Because I suspect what we'll find is that there's other Walmarts, and this was a super Walmart, by the way, is that you'll see other super Walmarts right next to them, and they put them too close to each other. That's what's probably going on. Walmart knows that they have a problem expense-wise. Why? Because bottom line is that you know, they have a huge amount of competition now, and the structure, no doubt, I suspect some of that, not all of that competition, some of that competition, no doubt, is coming. You know, whether it's Family Dollar, whether it's Target, you know, they're hitting into them, and they must be hitting into them pretty good. So we'll see where that whole thing does shake out. That's going to be intriguing, though, to see inside those 5 stores. Do you have other stores that are right there? The incredible thing about it, I know in certain states, I don't think we have it in Florida, but in certain states, when you basically are going to lay off that many people, you have to actually give notice you know, some type of notice that that thing is going to come down. You know, we'll see where that shakes out. But the bottom line is that I suspect Walmart has some problems, and you know, we'll see if in fact it's just the whole retail sector in general. In fact, let's look at a couple others. So if we look at, oh, I know. Oh, this is just the opposite, Costco. So check this out. Costco, folks, you know, Costco got to get rid of American Express. The reason they got rid of American Express, of course, is that was an exclusive, by the way, too. The American Express deal, taking the American Express card. Well, check this out. It just came out what Visa and MasterCard, they have to pay Visa or MasterCard, and guess what? It is saying, this just came out 15 minutes ago, it's saying Costco has attained a goal that retailers have sought for years, near zero expenses for credit card payments. In a deal with Visa and Citigroup, Costco's acceptance cost will be about zero, according to people familiar with the arrangement. That compares to roughly 0.6% for each transaction that the retailer pays its current partner, American Express. And, you know, if you are a retailer out there, you know that that 0.6% would be great, because the normal charge out there runs with fees, folks, runs about 2.73%. You know, it's big money, and 2.73% doesn't seem like big money, but it is absolutely big money on a continual basis. But bottom line is that Costco, when you do take a look at Costco, well, Costco just flipped that whole thing around. Costco today came down 254, but that's coming into a big sign of strength. The sign of strength of Costco that it was coming into is this 140 or 144 right now. We came down to 4 million shares, but yet you went up on 10 million. So that's an equity that, bottom line, you know, looks like it's still going to hang tough at those highs. Sunday night, folks. Sunday night, you can expect some action in the E-minis. The E-minis will open at 6 o'clock on Sunday evening, Eastern Standard Time. And what that's going to be all about, China will already be opened. Let's see, China will open at 8 o'clock. 8? Yeah, China will open at 8:30. So what you'll probably see, no, the futures will be trading, though. Now, these E-minis Sunday night, so the E-minis were down 25 today. When you take a look at that, the next stop on the E-minis go like this. Right now, we closed at 275, 2075. You could be, yeah, you could be at, I don't think you'd be at 38, but you can be at 64 pretty easy. Yeah, 64 is easy. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, great weekend, safe weekend. Looking forward to speaking right back here on Monday. Go get them, folks.